The 4-year Bitcoin cycle has been gospel for over a decade. But what if that pattern really is breaking? Stablecoin legislation is moving through Congress, the CEO of Coinbase is even calling Bitcoin the next global reserve currency, and war tensions in the Middle East are rising fast, with the US inching closer to direct involvement. Today, we dive deeper into a thesis gaining serious traction, that Bitcoin's wild booms and brutal busts are giving way to something slower, stronger, and in a world that feels increasingly unstable, far more permanent. For over a decade, Bitcoin has been known for one thing above all else: volatility. Boom and bust, greed and fear. The 4-year cycle became gospel. Halvings, blow-off tops, brutal drawdowns. But this time, almost everyone agrees something does feel different. And it's not just vibes. The data backs it up too. Drawdowns this cycle have been shallow, typically 25 to 30%, but they take months to resolve. Volatility is half of what it was in 2021, and a third of what it was in 2017, and yet the price just keeps grinding higher. This isn't the parabolic mania we've come to expect. It's more of a slow-motion supply shock playing out in real time. Brad Mills recently laid out a bold thesis and some compelling charts, arguing that Bitcoin cycles may be over entirely. His view: we've crossed the institutional chasm. Retail-driven boom and bust cycles are giving way to structurally driven demand from ETFs, treasury strategies, and sovereign-scale entities. And like the S&P 500 in the quantitative easing era, Bitcoin may now be trading in a parallel ascending channel, with shallower drawdowns, longer consolidations, and relentless capital inflow from large players who don't sell. The volatility is shrinking, the hot money is leaving, but conviction is higher than ever. And if you're serious about building generational wealth through Bitcoin, not chasing altcoin pumps or timing market tops, Swan Private is for you. The Swan Private team works with family offices, high net worth individuals, and corporate treasuries to build Bitcoin strategies for the long haul. If you want concierge onboarding, deep research, and direct access to the brightest minds in Bitcoin, go to swan.com/private to guide your Bitcoin journey with intention. Now, it's not just Brad Mills saying this. There's been no shortage of analysis and theories on this cycle, and in many ways this is just a new branding and wrapper for the Supercycle theory that's been around since 2021. And you can't blame Bitcoiners for being curious. This cycle clearly hasn't behaved like the others, and it continues to confuse the hell out of anyone relying on old signals. Since the FTX collapse in 2022, we've entered a different volatility regime. Bitcoin has traded with a volatility range of 40 to 60%, down from nearly 100% in 2021. At the same time, long-term holders are refusing to sell. MVRV, market value to realized value, a key valuation metric, isn't spiking to excesses like in 2017 or 2021. Instead, it's oscillating calmly between 2 and 3, suggesting investor portfolios are steady, not euphoric. Also, long-term holders seem to still be holding, even after rallies to 60K, 90K, and now over 110K. So far this cycle, we've built visible support at multiple price levels: 20K, 40K, 60K, 95K. In this way, this cycle is very different from 2017 and 2021. We're forming a staircase of conviction, not a rocket ship of greed. And that's exactly what institutional money needs to feel comfortable allocating. Meanwhile, stablecoin momentum is exploding. And surprise, surprise, that's bullish for Bitcoin. The US Senate is advancing the Genius Act, a stablecoin regulatory bill backed by President Trump. Shopify, Square, and Stripe are rolling out stablecoin payments to millions of merchants. Even Amazon and Walmart are exploring launching their own. This isn't crypto adoption. It's the normalization of digital money, and it lays the infrastructure for Bitcoin to become the final destination. Now, let's talk about the elephant in the room: the debt. The US can't grow out of the debt. It won't cut spending. Default is off the table. That just leaves one option: inflate. Here's what legendary investor Paul Tudor Jones had to say on Bloomberg last week about the debt and portfolio construction to beat inevitable inflation.
The playbook's pretty clear historically and right now. We are fiscally constrained. We're in a debt trap. You're going to have to run negative real rates to get out of it. That's why you have to think about what is facing our policymakers in this debt trap as you construct your portfolio. So what would an ideal portfolio be in something like that? It would be some combination of probably gold, vol adjusted, Bitcoin, gold, stocks. That's probably your best portfolio to fight inflation. Vol adjusted, because the vol of Bitcoin's obviously 5 times that of gold. You're gonna do it in different weights.
You said at one point you would allocate 1 or 2% of your portfolio to Bitcoin. Is it still?
Yeah, I think you just, particularly now that the roadmap is clear, then the Again, if I'm a policymaker, I'm going to run really low real rates. I'm going to have inflation running hot, and I'm going to tax the American consumer to get out of my debt trap. And that's exactly what Japan, who's the most fiscally constrained in the world, doing. And it works until the population throws you out because you let inflation get too hot. So maybe you're in a world with 3.5% inflation and 2.5% overnight rate, and you're trying to run hot and grow your way out of it.
Tudor Jones isn't the only one calling out the growing elephant in the room. At the Coinbase State of Crypto Summit in New York last week, Coinbase CEO Brian Armstrong said something real Bitcoiners have been saying for over a decade now.
Money has multiple purposes, right? It's a medium of exchange, which stablecoins is solving beautifully. It's also intended to be a store of value. And right now, democracies around the world are really struggling to get their deficit spending under control. And I think that Bitcoin actually, I guess my crazy, little bit out there idea is that I think Bitcoin is going to provide an important check and balance on deficit spending. And if it gets out of control too much, people will flee to it in times of uncertainty. And it could actually end up that Bitcoin is the new reserve currency of the world.
Bitcoin is the new reserve currency. You heard it here first.
No, we definitely didn't hear it there first, but it is refreshing to finally hear the CEO of the largest regulated crypto casino in the world speak the truth on Bitcoin and its full potential. And while inflation may be the most convenient way to paper over the debt, what happens if it doesn't work? What happens if the next black swan isn't inflation, but war, or deflation, or both? Tensions in the Middle East are rising as the US is edging closer to direct involvement in a regional conflict, and markets are quietly starting to price in the risk of global contagion. But here's what most analysts miss. Not all assets die in deflation. In the wake of the dot-com bust, it was the strongest Web 2.0 companies, the Googles and Amazons, that thrived. Not because they were speculative, but because they were quality. Bitcoin stands to play a similar role in today's financial system. It doesn't require hyperinflation or fiat collapse to thrive. It just needs a world where trust is breaking down and where people are looking for something incorruptible. Even in a deflationary crunch or global war, Bitcoin's lack of counterparty risk is exactly what makes it attractive. Just like gold once stabilized sovereign trust, Bitcoin is poised to serve the same role in a digital age. And when chaos erupts, whether from AI, war, or debt collapse, black swans may no longer derail Bitcoin. They may accelerate the shift towards systems that don't rely on centralized control. In a world that feels increasingly unstable, Bitcoin isn't just surviving. It's starting to look like the only thing that's built to last. It's no longer just a hedge. It's becoming a check on reckless government spending, and a monetary alternative being adopted by individuals, corporations, and even nations. And if you still think this is just hype, take a look at this new chart from Bank of America. They have Bitcoin listed alongside the printing press, steam engine, light bulb, internet, and AI. Is one of the most important and notable technological disruptions in the last 1,000 years. That's not speculation, that's history. And while Wall Street tiptoes in, and Shopify and Square add Bitcoin rails behind the scenes, we're witnessing a slow but unstoppable transition to a monetary system that is hard, scarce, and incorruptible. Here's a stat that's pretty wild. The combined market value of top ETF holdings and treasury companies is now larger than Bitcoin's entire market cap was in late 2017. What we're watching is a gradual rotation from speculative hype to strategic allocation, from altcoin gambling to Bitcoin conviction, from retail emotion to institutional discipline. The 4-year cycle playbook might not be gone, but is no longer running the show. We've entered a new era, and those impatiently waiting for fireworks might miss the slow burn of the real revolution. And if this really is a new era for Bitcoin, where it's not just a store of value, but a cornerstone of future monetary policy, then the conversation has to move to Washington. That's exactly what BTC and DC is about. This September, some of the most serious voices in Bitcoin will gather just steps from the Capitol to educate lawmakers, advocate for sound money, and help shape the policies that will define Bitcoin's role in America. If you care about where this is all headed, join us. Head to btcnddc.com for more info and tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? Is this just a slower version of the same cycle, or is the Sailor cycle real? Are we watching the final great accumulation before the world wakes up, or the beginning of a new monetary epoch playing out in slow motion? Let us know your thoughts in the comments below, like this video, share it with someone still waiting on alt season, and subscribe for more pure Bitcoin signal. Thanks for watching, and remember, TikTok next block.